Well, as we begin, as we usually do with the markets, the S&P 500 is extending its win streak to 6 straight days, despite Moody's downgrading the U.S. credit rating at the end of last week. And joining me now with more is Ed Siddell. He's the CEO and Chief Investment Advisor at EGIS Financial. Ed, it's good to have you on the show this morning. Clearly, investors and traders have been bullish of late. We see a bit of a breather this morning. Do you think these levels in stocks are justified?
Well, thanks for having me back. And you know what? The markets are fickle. They're just looking for any kind of a good news or any type of good news. And really what we saw yesterday, even with the downgrade of Moody's, investors, they shrugged it off. And I think they're seeing bigger picture long term as to where the economy is going to go. The extension of the tax cuts as soon as the reconciliation bill is passed, deregulation, lower energy costs, and long-term investors are really happy with where the market is going and the economy.
And how is that impacting how you're advising your clients?
We were sitting in a lot of cash, but once we hit that low in April, around April 8th, we started dollar cost averaging back in. We saw some really good buys going forward, and so we're still deploying cash back into the market now, and we're very bullish. We think the market is going to wind up being positive even off of the highs by the end of the year. And we think the economy is really going to start to turn around by the end of the year as well. We don't think we see a recession anywhere in sight.
Interesting, Ed. So where do you see those opportunities? What have you been buying as you do dollar cost average back into this market?
Well, we like small caps. That is the lifeblood of America. As we see these tax cuts getting passed or extended, I should say, and deregulation, we're already starting to see SBA loans for manufacturing. They're up over 70% for the year. So we really do like small caps. We still like large cap growth, AI, the tech sector, as well as the financial sector as well. We think that with deregulation, that's really going to benefit not the big banks, but the smaller and regional banks.
Yeah, I do want to ask you, we had seen Home Depot, NYSE listed company, report earnings this morning. That stock, last I checked, was up 3% pre-market. We are just about 25 minutes away from that market open. Said it doesn't anticipate that it will be raising prices due to tariffs, and in fact affirmed its full year guidance. That is sort of sticking out across other companies reporting results. What does that tell us?
Well, it's just like anything else. We just need a couple companies to stand firm and say, okay, we see the impact, but bigger picture, we're going to come out way ahead. I think as long as there's reciprocity as it relates to the tariffs and the taxes going back and forth, and with lower energy costs, I think things are going to wind up being cheaper. A lot of companies that we have seen, even as their earnings reports have come out very high and very good for most companies in a lot of sectors, really, they're hedging their bets just in case. But again, long term, I think we're going to start seeing a lot of companies come out and say, you know what, we're not going to have our prices affected by tariffs because we don't know what they're going to be yet.
Interesting. Jamie Dimon, meanwhile, saying that markets are too complacent on tariffs and does see an earnings growth collapse for the S&P 500. You, it sounds like, have a very different view. What more can you tell us, Ed?
Well, we do, because again, if you remember, it wasn't just that long ago, within the last couple of weeks, he was calling for a recession as well. So again, looking bigger picture, an earnings collapse, we really don't see that happening. We're already starting to see a lot of countries coming to the table because of that reciprocity. And I think the U.S. is really going to come out on top. And again, once we start getting, the first thing that we have to do is get the reconciliation bill passed, so that the tax cuts get extended. That's number one. Number two, we need to get some definitive answers as it relates to the tariffs going forward, because once that 90-day extension reaches, we want to see some good results. Then we're going to start to see deregulation, energy prices coming down, and that's really what's going to bolster the economy and earnings going forward.
Yeah. Home Depot stock currently up about 2% pre-market. Ed, I do want to ask you about that Moody's downgrade of U.S. credit. Does come as the ratings agency cited concerns about the deficit, the budget deficit, especially at a time where interest rates are elevated. You mentioned earlier that budget bill that is expected to be passed and presented to the president that would extend those tax cuts. And hopefully help the budget to some extent. But what about interest rates? How does that factor into this? Knowing that the Fed chair has said that he does anticipate to be patient when it comes to lowering rates.
Well, we think that the Feds really should be looking at the hard data, the economic data. They were late to the game when it came to inflation, when it was on the rise, saying that it was transitory. We believe that they're going to be late to the game in lowering rates as well, because if you look at the hard data, the economy, it is slowing. Inflation, the growth rate of inflation is lowering significantly. It's well within that target rate. And we have to lower rates because we were just talking about the deficit, the national debt. We've been saying for years and years that we're facing a debt bubble. And as these notes are coming due, we have to be able to refinance them at a lower rate, because right now it's already exceeding defense spending. And so it could wind up being the second or even first largest line item if we don't get interest rates under control. So we think that they're probably going to lower them in June. And we're going to see at least one more, maybe two more lowerings this year.
Mm-hmm. Ed, as you mentioned, small caps are an opportunity. Anything else that you have your eye on here in this market?
Again, we really like the financial sector because of deregulation. We like technology as well. We think manufacturing long-term, that's going to be a really good long-term play.
All right. Ed Siddell, he's the CEO and Chief Investment Advisor at EGIS Financial. Ed, thank you.
Thanks, Kristen.